the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
There are some interesting examples of companies using crypto as a business enabler rather than simply as an investment. 88 is one such company. It uses crypto not just as an alternative form of currency for transacting, but as a way to network with other like-minded businesses. So, for example, if you're a small business looking for suppliers in China, they'll connect you. They have their own Rand stablecoin called ZAR8 that allows you to off-ramp from the fiat space and onto the blockchain. And they're licensed to transact in Forex and crypto. The whole idea being to assist smaller businesses to expand using crypto and stablecoins as a way to reduce traditional banking charges and speed up transactions. If you want to do crypto arbitrage, they'll do that as well. Treasury management is another part of the toolbox where companies are able to switch volatile local currencies into something more stable, like the US dollar-backed stablecoin Tether. And to look into this a little bit more, we're joined by Fadil Moti, who is founder and CEO of 880, to find out more. Hi, Adil. Thanks for joining us in the studio.
Awesome. Thanks for having me, Kieran. It's an absolute pleasure and an honor to be here.
Great. Well, let's start with your personal backstory, how you got into crypto and what led to the formation of 880.
Yeah, so initially early stage investments into Bitcoin piqued my interest into the financial markets and trading. Just after my university, I was presented with an opportunity to do stock brokering for private clients. And like any startup, we sought other low-hanging fruits within the industry. Because of our family background in trade and businesses, we identified a gap to service businesses with facilitating Forex payments, which led to our treasury business and us becoming a treasury outsource company in technical terms. At the same time, I co-founded two other fintechs. One was a real estate crowdfunding platform, which has a fully regulated structure, and that gave us insight into legal structuring in alternative investments. The second, a robo-advisory and share trading platform in the UAE, which gave us insight into global trading. And number three was a portal for crypto trading. This was mainly for arbitrageurs at the time and for facilitating and management and reporting of the trade. So our clients could access this portal to monitor their trades, their profits, and so forth. And what we realized was that we had these different brands or different entities, and it became difficult from a brand awareness of who we are and what we do. And then we sought out on a rebranding campaign which brought all of our businesses together under 88, and that's how 88 came together.
And how long has 88 been going?
So 88 has been going now for 2 years. It's the second year. We completed our rebranding campaign at the end of 2022 and the start of 2023 completely from all legislative side of things and technically. And since then, we've been operating under that company and brand.
In terms of licensing, you have a Forex license, presumably, and you've got a crypto asset service provider license
That's
as well?
Correct. We hold an FSP license with the FSCA. We're also regulated by the Reserve Bank to facilitate treasury as an outsourced company via authorized dealers, so the likes of Capitec, Bidvest, Investec, and so forth.
You mentioned robo-trading in the UAE. Explain what is that. Is that automated trading using bots?
So actually it's robo-advisory. Basically it's an automated financial advisor where you go through a list of questions very similarly like how you would with a financial advisor, and it uses an algorithm to structure a portfolio suited to your risk profile. Within that business we had a share trading, like fractional share trading. So you could buy a fraction of an Apple stock or Microsoft, and you could actively trade. So you could decide whether you want to be a passive investor or an active investor and trade those stocks yourself.
All right. So it seems like OVEX and Five West, two other companies in the space, you operate an over-the-counter or OTC desk for those who want large quantities of crypto. When did that start and how's that going?
So that started in early 2019. Our Forex desk was an obvious facilitation to trading for arbitrageurs. And because of our understanding in the market and the trade, we built relationships with the like so mentioned players and other participants to offset that liquidity. This created both a buy and sell side on our own desk, which evolved the OTC desk to where it is today.
All right, so I'm interested in this thing about using crypto as a business enabler because it seems to be something that is probably fairly unique to what you're doing. I don't know if others are doing it as well. So that's using alternative payment mechanisms based on the blockchain. You've also got your own Rand stable coin called ZAR8, and I'd like to find out about that. But you had quite an extensive network of suppliers around the world. You're using this to assist companies to connect. Just explain that. I mean, so you're much more than a crypto or an OTC desk or an arbitrage provider. You do more than that.
Yeah, so firstly, the business of facilitating payments gave us a better understanding of import and export trade. And the objective was to always grow these businesses trading with us so that their volumes inherently grow on our desk. What we found was that in SME purchasing goods from Asia, there was often more than one supplier for that particular product. And our relationships with that alternative supplier could give that SME better pricing and terms. If the SME has been trading long enough with us, that gave us an opportunity to further trade finance their goods. So connecting these trade-offs or these suppliers with different traders in Asia, whether it be for a niche product or a product that's quite popular, built our network, should I say. How crypto fits in is that merchant technology can enable these businesses to accept crypto as a form of payment. So if you have an online store, or even retail stores for that matter, you could accept crypto from your customers. Some would choose to immediately convert that into fiat or alternatively use that to settle suppliers, which often do accept, especially in Asia and other parts of the Western world. A great use case is PayPal and PUSD. We've seen that formation happen quite quickly over the years. And what that has done has enabled these businesses to not just off-ramp that crypto immediately, but also use that to settle their suppliers. It is important to note that businesses need to comply with local regulations. And in South Africa, we have exchange control, which is where we assist businesses with as well, which is important for their business continuity.
All right, so you're making sure that they remain compliant, because there's a lot of discussion in South Africa in the crypto community that you can actually spend Rand stable coins in China, for example. It's accepted. But is that legal?
Yeah, I don't think there's any law or legality around it just yet. What we've seen is that Asia and parts of that world have unbanned or decriminalized crypto as a means of use. But I think that it's quite still a gray market where these stable coins, whether it be a ZAR stable coin or Tether, could be easily converted into any currency of choice and off-ramped into the region itself.
All right. Now, across Africa, there is a growing awareness of stable coins as a hedge against weak local currencies. So we've discussed this many times on the podcast here. You look at the Malawian kwacha. It doesn't matter where you go. The Nigerian naira is probably the worst example of decimation of value, or perhaps even in Congo, massive destruction of local currencies. So people are waking up to this idea that you can use these stable coins as a hedge against that. Talk about that, and because I guess that would fall under treasury services. That's one of the aspects that you would be looking at there. And is there demand? Are you starting to see demand for that in South Africa and elsewhere in Africa?
Yes, that's correct. It plays a very important role within the treasury management scope, where businesses are managing their cash and liquidity. The South African rand is relatively stable and liquid comparatively to other African countries. However, the emergence of stable coins has given a good hedge to any currency deterioration. Businesses can fully or partially hedge themselves with access. In African countries, the lack of access to dollars, because there's a shortage of dollars in many of these African countries, often creates this currency devaluation and destruction. But local crypto desks like ourselves and other players in the market create a liquidity for stables. This becomes their access and their hedge, and even so partly the payment rails for them facilitating the trade within the region.
So how does that work in a country like Malawi, for example, or if you're in Kenya, which has got its own perhaps exchange control regulations? There's a limit on how much you can export across the border. What do you do there for a company? What advice do you give them? Do you tell them, take your local currency, convert it into a dollar-backed stable coin like Tether or USDC, and then when you need to spend it, you convert it back into fiat? It does seem a cumbersome way of doing it, but it would protect you to some extent.
Yes, definitely. I mean, in times where there are market volatility and currencies suddenly deteriorate in a quarter of the year by 25%, you want to protect yourself against that risk. So holding those stable coins is has now become important for your business continuity. And we play a very similar role to mobile money operators within the North African region, where we onboard an individual, and that individual is a related party to the business so that we know who we're dealing with. And they will often use their local currency to move into crypto stablecoins like Tether or vice versa. And because there's quite an active market, we're suddenly finding there's a buy and a sell. So there's a match trade that's happening. And it's easy to actually get in and out. In some countries, it's often more difficult, like Malawi, where there's a lot less liquidity and a lot less players in the market. And what happens is that the premium to get from your Malawian kwacha into USDT is now really, really high. For businesses that are extensively operating there, it might be okay because that's technically similar to our black market rate. But for other businesses, it may not be viable at all.
Right. So you are treading a kind of a regulatory landmine when you're walking into Africa, because each country is going to have its own set of regulations and rules. And you have to make sure that you comply in each of these different countries.
Yeah, absolutely. It's quite important. And I think if we're going to be relevant in the market for the future to come, it's quite important for us to navigate that landmine and work with the regulators to ensure that, we are complying. We're doing the correct due diligence on our clients, credit ratings even so far as to ensure that in the event that we're not banking somebody that has a terrible credit score that is just looking for ways to funnel their money out and hasn't paid their taxes. So it's quite important that we touch base with the regulators on an ongoing basis. And regulation is still developing in some of these countries. It hasn't been determined at all. And a lot of these businesses like ours don't know where to start. But what we like to do is often take foreign regulation or South African regulation and see how we can apply it in these different jurisdictions to ensure that we're not stepping on the wrong foot.
Right. So go back to this thing about Business Enabler, and you've got this network of companies that you have in Asia in particular, it seems like. How is that built up? Is that, you mentioned that your family's got a trading history and these are relationships that are built up over a long period of time, or is this something that you have developed more recently?
Yeah, so the family has a background in trade, import, export, and local trade. So over the years, we maintained our relationships with different suppliers. At the same time, as we grew our business within the treasury space, we found that certain of our customers were dealing with similar like suppliers, and we created connections around that, and a network. Like mentioned, there's often more than not a supplier that has a product that you're purchasing at a better price or better terms that can, they can offer you something better, a better deal, for example. Yeah, over time we built up this network, and we found that a lot of our SMEs would be dealing with these suppliers and then looking for trade finance. So inherently, we would now build a relationship with the supplier because we're the importer of that goods, trade financing our local customer.
So are you involved in trade finance as well?
Yes, absolutely. So if businesses have been trading with us for some time and we understand their flows and we understand their business, our objective is to always grow their business. And if they're looking for trade finance, we look into it on a risk-based approach.
Right. Another thing you offer is crypto arbitrage. Where there's a lot of companies in South Africa. Not a lot. There's probably a handful that are doing this in a meaningful way. Do you do anything different to the others in this space? Future Forex and Currency Hub, for example, they're involved in this. How do you do things differently, or what's your unique selling point?
So there's nothing majorly different. The recipe for the trade is pretty much the same. The purchasing the asset offshore using the discretionary allowance and foreign allowances of an individual and selling back to the local SA market. It's a simple back-to-back trade, locked in on both ends. The Forex desk and the crypto exchange, a preempted and an instant profit is already there. So we provide the turnkey solution for our clients to trade and participate. But I would say that, the recipe is pretty much the same across all.
And what's the crypto arbitrage premium looking like at the moment? It was quite high. It went up to 3% at times this year, and then, it was 2.5%. It seems to have gone down a bit.
Yeah, it's roughly trading at about 1.8%. Between 1.8 and 2.2% is what we saw today. I think at those times where it goes really high, immediately we see sellers come into the market or arbitrageurs come into the market and taking advantage of that premium. And then immediately the premium would come down. And I think there's different factors at play, like today, for example, we have a dollar holiday, which may increase the premium because arbitrageurs can trade less. In other days, there may be less liquidity in the market and a higher demand for stables. And that pushes up the premium. But what we do know is that you can only take advantage of the trade between 8 a.m. and 5 p.m. because once 5 p.m. comes, you can't book that Forex. And you'll notice that increase then after. So I think arbitrages have a big role to play within the space of keeping that premium where it is. And I think as more players come in, the premium should drop, or if regulation stops allowing the trade or prevents the trade in any form or way, like the banks, then the premium could increase.
Why did the premium increase earlier this year above 3% at one point? I think there was the Reserve Bank issued a directive or a notice that borrowings could not be used. You could not loan to do crypto arbitrage. Is that the main reason?
I think that's partly the reason. I think some banks have stepped back from facilitating the trade from a Forex perspective, as well as the directive from the Reserve Bank where an NCR or credit provider cannot loan money to an individual for the purposes of the trade. So an individual would typically have 200,000 Rand, would be loaned maybe R1 million to trade, and of course that created more liquidity in the market. But when that stopped, yes, that reduced the liquidity, and our depositors had to come back into play.
You seem to be taking a pretty big bet that the future of business will be done using alternative payment methods. Where do traditional banks fit into this future?
Well, I think banks play a very pivotal role, for now, and there's always going to be a need for fiat, and the banks are the gatekeepers of those fiat on-ramps and off-ramps. Businesses will always need fiat for local operations and taxes, and banks also provide liquidity in the market, giving access to savings and money markets. An example is Tether, similarly buying treasury bills, right, which creates liquidity for their own stablecoin. So I do think that the future will have a mix of digital and traditional banking economy, and eventually when CBDs come into play, those will become the backbone to how the banks transact into the blockchain and digital space.
You see CBDCs, which are central bank digital currencies, basically the Reserve Bank issued Rand.
That's correct, yeah.
But it is programmable money, and there's in the crypto community, a huge backlash against that. You see it happening in South Africa, do you?
I think we're still far behind, but I do think that it's coming as other economies start to grow into it, and we are already seeing it in parts of the world where trade is a lot more restricted, the emergence of stable coins by government. So I do think that it will come into play eventually, and it's going to be a use case. But the transition from traditional or cash into crypto, or that CBDCs, should I say, could take a long time.
All right. We're going to leave it there. That was Fadil Motti, who is the founder and CEO of 88. Thanks very much for joining us, Fadil.
Thank you very much, Kiran. It was an absolute honor.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.